Hello and welcome back to the channel. This is Christian. This is Multifamily Strategy. Today I'm actually going to go live. This is something that I have not done in a long time, something that I think we really need to do. In our group, our actual mentorship course on multifamily strategy, I had an interesting issue this week. We had the first time in years where we had a deal deep dive called and we only had a few deals to look over. Usually you have a whole bunch. I identified the problem as you're either uncomfortable to share a deal because you don't know what you're looking at, or you just don't know how to find them yet. So I'm just going to go in live today on YouTube for the whole world to see, totally free. I'm just going to go look at deals, go through my actual process of, if you're trying to find an on-market deal, trying to get comfortable with underwriting, you want to do the napkin math, I'm going to show you exactly how to do the deal, the way that I find them, the way that I'm negotiating them. This is just me looking for deals. Now, if I find something interesting, we might underwrite it. But we're going to actually go through what is the process, what am I looking for, how are we finding them, what are the main points. I think this might be one of the best lives that we've ever had. So I'm going to get rolling straight in there. I'll figure out how to share my screen and do all the fun stuff. If you guys have any questions, I'll be watching the comments here on YouTube and Instagram off to the side. But I figured if I'm going to underwrite a deal and I'm going to do this work today, might as well do it with y'all. So enjoy the live. I'm going to go ahead and get this rolling here. So first thing we're going to do, I'm going to share my screen. And let's see, can I do just the full screen? That's the entire screen. Yes, I can. Share. All right, there you go. You guys see the infinite screen of screens. I'm going to go ahead and go here. Hop over to a site called Crexy. Now, if you're looking for on-market deals, LoopNet is not the best site. I like buying multifamily. I like buying commercial multifamily. I worked for LoopNet for 4 years. What they do is they essentially suppress some of the listings to convince brokers to advertise. Now, the brokers who are advertising are hungry for business. If I'm looking for relationships with brokers, I love LoopNet. Hungry brokers are there. You can call those people. They're more likely to respond. On Crexy, basically all the listings are shown. Now, when I'm looking for a deal, I want to see all the deals. I want to see who's listing the deals. I want to see what's out there. I have found that Crexy is the easiest, most efficient way to do that for free. So I'm going to hop in here. I'm going to check. So I live very close to Fort Worth. I own in Stevensville, Texas, Laredo, Texas, McAllen, Texas, Houston, Texas. I do not own in Fort Worth yet. I do live very close to Fort Worth. This could be the first place that I check today. So the first thing that I'm looking for is I'm literally looking at pictures for deals that are interesting to me. Now, I specialize in entry-level housing, things that would be a fantastic place to rent to people who are on Section 8. I like doing entry-level housing. We're very good at it. I'm good at the renovation standards. So I'm probably going to eliminate all the Class A stuff from my search really early because I don't want to be paying $250 a unit in Fort Worth. Now, if I find something that's closer to, say, 90 to 120 a door, that's the first piece of napkin math, is know in your market what the properties that you want to buy, what they trade at per unit. Is that how we're going to underwrite? Heck no. But is that an early indicator of this? Is this a deal I'm interested in? Absolutely. If I know it's twice what I want to pay for a unit, I know I'm not going to get that deal to work. I can eliminate a lot of stuff on a price per unit standpoint before I actually do my underwriting. So we're going to start there. First thing I'm going to do is I'm going to set my filters in. Let's go all types, and I'm going to go to multifamily. I actually own some RV parks, done mobile home. I'll keep them open for this. We'll see if we see anything interesting. But what I really want to do is find a great Section 8 available property. So I'm going through here. By the way, Crexy is free to have a login for. So if you want to view some of the stuff, do that. Unpriced, 26 units. Looks pretty nice. This might be above what we do for Section 8. 32 units, less than 100 a door. This one's actually not uninteresting. They look very plain, though, a little prison blocky. I don't know that this is my first pick, but let's put a pin in that one. That one's interesting. One thing I'm also noticing when I do this search, I like to look through the individual. I like to look through these individual listings and who is representing this multifamily group. They're friends of mine. Trinity, Matthews. It's good to know who's representing all these because that's probably where I want a relationship. This building looks cool. Actually, 10 units. It's about 100,000 a door, 107,000 a door. That one's actually really interesting. See, this one looks too nice for me, but it's 6 units, 700,000. This looks like more like a house, though. I'm not. I don't have a good feeling about this one. This is development, and I don't want to spend $70 million. It's going to be well out of my price range. Okay, so here's what we have for Fort Worth. You know what I was interested in? I was interested in this 10-unit building here. So that's what I did here. So 2 buildings that I was immediately interested in. This one may be interested in. 54 units, unpriced, without having a price. I like looking at ones that have a price. I don't want to spend $8 million on a RV park right now, even for 103 units. So I'm really down to this deal and this deal. This seems really palatable, though. And this is a cool looking building. So this is the one that we're going to look at today. Oh, by the way, if you guys have any questions along this process, feel free to ask in the chat. Here's my screen right here. I can actually see everything that you guys ask here on the side of my screen. Anyway, diving back in. First thing I notice, how long has it been on market? It's been on market for 58 days. Now, the way real estate trades is real estate. If I have a friend who I know will buy my property, and trust me, owners know owners, I'm going to sell to them if it's a fantastic deal. 9 times out of 10, I'm going to call someone who I already know, like, and trust. I'm going to ask them to buy it. They'll buy it. So we know going in, most deals are going to trade off market. The best deals usually trade off market. There's some reason that this got listed and did not just go to someone's friend. I don't know what the problem is yet, so we're going to see if we can identify it. It's been on market for 60 days. It seems to be a nice looking building at first glance. I'm not sure what the problem is, but there's some problem that the seller has that has them selling this building, and there's some reason that it hasn't been purchased for the first 2 months. They're claiming a 7 cap. Now, this traditionally is closer to a 6 cap market. So they're claiming this is a pretty good price for the income that is being generated on it. We'll verify that later if we have financials available, but I will run you through that math too if we get there. Looking for any hints of what we're buying here. Roof replaced in 2022. That's good to know. So maintenance is likely actually better than I would have guessed. Okay, that's what we got. Listing broker. Cool. Let's look through the three pictures we have. See if we have any interiors here. That's always nice. I'm seeing the lawn is pretty dead. Not a lot of love. I'm seeing really beat up pavement on the side. These are things to note. Exterior looks immaculate. They did a good, it looks like they've done a facelift on this recently, would be my guess. With the new roof, they probably repainted. So this is all probably done with, I'm guessing it all got done 2022. So probably within the last 2 years. But I can definitely see some deferred maintenance. I'm imagining 10 units. 1, 2, 3, 4, 5, 6, 7, 8. I'll bet you this back building. So it's probably this whole L, and there's your parking. Subject property. Yes, we were right. So it's this whole area here. Big lot near Highway 199. I don't hate this location, by the way. This is not a bad area. Okay. I'm still interested. So next thing we want to do is we want to see if there's any numbers. We'll check their offering memorandum. We're going to see. It's called an OM. It's free to have a login. As soon as you have a login, you can view all these OMs. Listing information, investment highlights. I already know I love Fort Worth. 1 and 2 beds. You can add washer and dryer. Okay, so one unit has washer and dryer connections. The other ones don't. So there's no in-unit washer or dryers. I'm curious if there's a laundry room. I did see that there was a vacant garage in the listing. I'm wondering if there's an ability to create like a laundry room for these. That would be nice. It's a cool looking building. Welcome to underwriting, though. Oh, here's an interesting piece of information. This is something to look for. Loan terms. They're saying 7.5 interest rate. I'm actually seeing rates closer to 7 today, which is good. They're writing this at a 65% loan to value. Now, a lot of banks in this area will actually lend on 75, 80% LTV. If they're saying 65, there's something about this building that a bank is not going to like. That is the first thing that I see when I see 65% LTV. I'm seeing something here where it's like, hey, a bank is going to have a problem with this. There's either a maintenance issue, an occupancy issue, a bookkeeping issue, or something along those lines. Could be a foundation. There's something here that they're anticipating the bank is not going to like. It's good to know that going in. When I talk to a broker, I'll still probably ask the question, how do you think the bank's going to look at this? I'll see if I can't gain some information from that question. But that is something to note here, is that they went with a very conservative number. I'm going to guess there's a reason they did so. Well, we're fortunate. These numbers look real. So historicals, if you're noticing a lot of these numbers end in random digits, this is a lot more work than just using things that end in 5 and zeros. When everything's a round number, I'm a little bit more suspicious. I'm going to guess that these numbers are actually based on something close to reality. Current rental income per unit. Okay, so they're rented a little over $1,000 a unit is what they're saying right now. Right, this is an annual income, so they're making 13. So they're renting for about 1,100 per unit, assuming they're fully occupied. Management fee, real estate taxes. That will go up after you purchase, by the way. Insurance, that'll go up too. Utilities. So one thing that I do notice here, and this is normal broker stuff. Notice on the annual, so here's the pro forma means in the future. They're saying we expect insurance to go down in the future. That's not reasonable. So we know their pro forma numbers are bogus instantly, because real estate taxes in Texas, especially this area of Texas, it's usually about 1.8% of the purchase price is your annual taxes. They have taxes inching up barely at all. But it's actually pretty close to what it'd be. Real estate taxes might not actually move all that much if you think about it. See if I have a phone on me. I do. Purchasing for 1 million. It was 1,075,000. 1,075,000 times 0.018. About 20,000. Taxes might actually stay consistent. I think that's really realistic. Insurance, I do expect to be about twice that. I'm going to say insurance. We're going to write insurance at 20 when we do our math here. Other than that, these seem like very realistic numbers. Groundskeeping doesn't cost a whole lot. It doesn't look like they did a lot, so that's realistic. They're saying no turnover cost. Unlikely. Okay, so they're saying right now we have a net operating income of 74,415. I'm going to, since I am increasing the cost of insurance by about $7,000, we're going to say about 67,000 is about what I think the realistic day one NOI is based on. And again, this is napkin math. This is saying, okay, these numbers look right enough. I know insurance is probably going to be more than this, so we're going to add to the expenses a little bit. We'll say for now the incomes are correct. You verified this later, but initial math. We're a 6 cap market, which means your net operating income divided by the cap rate, the return one would expect, is going to be how much someone would pay for the property, the value or the worth. So 67,000 divided by 0.06. So it's likely worth, based on our initial assumptions, it's probably worth about $1.1 million. They're selling it for $1.075 million. We're coming in just under market price for where it's performing right now. That's pretty good. That's actually pretty good. Wow, they actually got really detailed here. Now, I think this pro forma gets a little rosy, but they put together a really good story here. I can tell these brokers spent time on this. These are professionals. Unit mix, 1 bed, 1 bath, 1 bed, 1 bath. I guess there's probably 2 different layouts of that. 2 beds. So, okay. 10 units. They're mostly 1-1s, a couple of 2-1s. Current rent. Okay, and they're saying they think they're actually pretty close to market rent. They used to rent per square foot. I usually go off of 1 bed, 1 baths, but this is good to know. They're currently bringing in. Oh, interesting. This is a little smaller than the number that was up top. Up top there. No, actually, no, that's about right. That's about right. They're using the same number. I did bad math. I was thinking it was a 12-plex for a second. It's a 10. When they rent, you're bringing in 12. Okay. Reasonable. Here's something I like to see. Check the comment section here really quick, too. Tony asked in the chat here. I'll post it up here on the screen. If it will let me. My goodness. There we go. What was my first deal involving seller financing? Is that your first ever property you bought conventional way? Yeah, so I bought 2 duplexes conventionally. Well, actually, first one was conventional. Second one was with a private money lender. They financed 101% of the deal, and I made $100,000 on that one. Then I did a 38-plex seller finance. It was on market for about 13 years, $2 million purchase. By the end of that year, by the way, it appraised for $4.1 million. So we made $2 million on the deal, which was fantastic. Paper money. Was able to pull $1 million out of that over the last few years, which is still fantastic. Never sacrificed cash flow, by the way. That was entry-level housing. That was a lot rougher than these look, which is interesting. So as I'm rolling through, I'll pull that question back off. There we go. Yeah, feel free to ask questions as we go. So as I'm looking through a deal like this, okay. A lot of natural light. Flooring appears to be laid more or less correctly. Not that that's going to be a huge part of value. Something I notice. A lot of different textures, tile floors. These are very basic. No carpets or popcorn ceilings, which makes me very happy. I don't like either of those at all. And appliances look nice. Look at all the like stainless steel appliances in here. You have the little fan, microwave combos. I'm fairly happy with what I'm seeing, actually. This is nicer than expected for the price that we would be buying this for. This could be an example of a deal. Okay, they have some rent comparables. So here's different properties around that area. Average asking rent. We'll verify this at a later time. I'll go to like apartments.com to see asking, and I'll go to something like Rentometer to look at what historicals were. This all seems very reasonable, though. So there's an argument that you should be able to get these up to $1,250 just based on these comps. You'll run your own comp set, but this is a really good offering memorandum. Funny enough, I'm going to the Fort Worth Zoo over the weekend. I may swing by this property when I'm down there. Very easy drive from my house. Okay, nothing else in this is probably going to interest me. I'm scrolling through. Love the stockyards. Scrolling through. Confidentiality. Any other hints on what we're doing? No. So, only thing I did not see here is I did not see why we're going to need to come that low loan to value, and I do not know why this has been. I don't know why this has been stuck on market as long as it has. Unless the numbers just don't work, which is always possible. Okay, rare occasion. First shot on market, reasonable price deal. Looks interesting. This is the type of stuff I want to buy. Also, your Section 8, I can see people being very happy to live here for like a decade. There's like one of these has like a back patio on it too here. Very interesting. The only thing I don't like about it is the property is like super unique. as far as like the way it's done in an L and just the shape of it, it just kind of looks like a unique style property. I like things to be more or less uniform. It makes them simpler and easier to run. But let's run with this one. I thought we were gonna have to look at a few, but this is like we have solid stuff to go off of here. So what I do from here is I'd start pulling stuff into the calculator. So let's see like where they're at. This is a calculator we use in our course all the time. I keep it super simple because I want to be able to go through these really quickly. So I'm coming in at the purchase price of not 10 million. That would be something. There's their asking. Down payment. 20% of that. 200 something. 107,500 times 0.2. So I'm going to see if they're saying 65. Let's say we're going to go 25% down. That's probably more realistic. I think I could, and I think I have the lender for that. Times 0.25. So we're going to do a down payment of 268,750. Now, I don't know if this deal is seller financeable. I'm going to guess that it's likely not. I'm going to guess that they're holding debt on it based on the size of it, the location, the fact that they just did that new roof. I'm going to guess that they're holding significant debt. Seller financing may not be on the table there. If it is, it's probably going to be partially seller financed. That's something that we just don't know enough yet. We're going to discover those options in a broker call. Right now, I'm going to underwrite it as if I'm buying it conventionally with bank debt, which you can still do $0 out of pocket. I need to have enough margin here, though, to raise the down payment and be able to pay back an investor in a reasonable way. So we'll see if we have enough room on this or not. Conventionally on this closing cost, let's say we have $10,000 closing cost. Again, this is napkin math. We're putting placeholders. Property taxes, we're rounding up slightly to about what it's at right now, 20,000. I think we'll stay about there. Insurance, we're going to go up a little bit to 20,000 because I think that's more realistic. Management, I'll make that a percentage of the income. I can manage this in my own company though. So I get to manage it I will charge myself 6% for properties that are in that location. I charge 6%. And I think it's reasonable. Fort Worth is pretty competitive. So while that's lower than some might factor, that would be my actual cost. So management, we're going to call equals this cell times 0.06. Monthly maintenance and repair. These looked like they were actually in better shape than I expected. I want to know the year built. That I use either 50, 100, or 150 per unit, depending on the year built and condition of the building. Let me see if that was readily available information. Otherwise, I'm going to assume these are probably going to be 100 per door per month. I'll call it $1,000 of just extra budget there, $6,000 a year for general repairs and maintenance. Again, this is napkin math. We're not doing a full underwrite here. Did I miss it? I don't think I did. When were you built? Tell me. Rolling through. I'm not going to waste a bunch of time on this if we're not finding it. We're not finding it. Well, I know the roof's new in 2020. It looks decently new enough. It looks decently new enough. Let's just go ahead and dive back in the L calculator. I'm going to budget $1,000 a month for a Templex. I think that's fine. Landscaping, we can use their actual there. That's what I like about having like real books. You know what? I'm going to make it easy on myself for napkin math. I'm going to go just make sure they didn't put in any of their... They did not. Good. I just wanted to make sure they didn't put any of their debt service in the wrong spot. Total expenses. $67,581. I'm going to just roll those all in. Well, PM fee is a little different too. What's the fastest way to do this? For ease of calculating, I'm going to take I'm just going to put this all in one spot. 67,581 divided by 12. They're paying $5,631 a month. This is what I love about easy calculators. So in my expenses, these are annual. I put all the monthly here. I'm just going to round all of them down. I'm going to put them all inside this field here. So we're going to say we're going to pay about 5, 6, 3, 1 in recurring expenses. I'll leave everything else blank. We're just going to use their existing numbers because we can always modify this. I just want to take a quick peek at how we're doing. I'm seeing a lot of stuff at 7% interest. I just got quoted debt quotes on the 44 that I'm buying in a nearby town. So I'm pretty comfortable that I'm going to come in around 7%. Monthly rental income, that'll be the last input, and I'll have a good idea what we're working with. And then I'll show you if I would buy it, why I would buy it that way, and how I would raise the capital, because I can show you all that in a few seconds on a call like this. We do this in multifamily strategy, by the way, all the time. This is what the mentorship's about. Finding deals, funding deals, putting them together. All right. What was our total income? Okay, notice this. It said they even called on here gross potential rent. I don't want to know the potential. I want to know what it's bringing in today. So those are cash flow projections. Here are their actuals. So we're taking 129 divided by 129,000, 129,949 divided by 12. We're bringing in about 10,800 a month. So today, how the property's doing. This is what we're looking at. This purchase, this down payment at 25% down, $10,000 in closing costs. I'm not saying any major renovations needed yet, but we'll discover that as we go. 20 for taxes, 20 for insurance. I think both of those are within the realm of correct. Expenses, rental income. What do we got? So you got a property that bleeds pretty badly day one, which is what I did expect because we don't have a whole lot of income going on here. We have a 2 cap, which is not helpful. I'm not seeing a whole lot of room on this bad boy. Now I'm going to make sure all of the math actually mathed correctly because I've been messing around with my calculators like crazy. So let's make sure our formulas are all as they should be. Is that the right monthly payment for that? 3,000 there, total expenses there. No, we've added too much to our expenses. I was like, that's too negative. You know what? When I rounded everything together, I took the taxes and insurance. I rolled all of their expenses into this number. This is an all-encompassing number right now for our napkin math. Let me verify that. Yep. And their expenses, I actually took their pro forma expense. They had expenses going up. What are they actually right now? Total expenses 55. Aha. Oh yeah, this is gonna be way cheaper. Okay, this might actually this is gonna look a lot different. I'll tell you that. 34 divided by 12. Okay, 4,627. I'm just gonna round up. This is an all-encompassing number. These are all the monthly expenses. On a 10plex, that sounds about right too. Okay, now we're talking. Okay. So we're coming in at it with my math and what they have and what I think is realistic. I increased insurance on my math. We're going to call this 5,000. This is going to be about 5,000. I have about a 6.5 cap and a 6 cap market, which means this price is still palatable. This is probably about the right price for the deal. Problem that I'm having with this is $436 of cash flow and a 1.8% return on investment. How am I going to raise capital if the return is 1.88%? Now, if I'm raising additional debt, this cash on cash return, it's the return on cash invested in the deal. So if I borrow it, it's the same number. Whatever I borrow to put into this deal, that money yields 1.88%. I would have to borrow at basically 0% interest to cash flow this. Now, I'm interested in the rental upside. So I'm going to rerun the numbers for where I believe I can get this deal. But for right now, this would be a non-starter. I'm not buying a deal that cash flows 1.88% because I can't borrow for it. If I have enough upside, though, if there's a lot of room to increase the value of this building, which there very well may be, I may be able to bring on a equity partner who will do this deal with me, and I can pay them out of the future upside. We can refinance, get them money. That's the next thing I look at. The first thing I see here, though, day one numbers, there is absolutely no way that I can buy this deal $0 out of pocket using only debt, which is not uncommon at all, especially in a core market like Fort Worth. It doesn't mean we don't have a deal yet. It means these numbers do not work yet. This will get eaten up immediately. And remember, we're using rough numbers. This is a rounding error saying that you're even going to make any money. So that's the first thing I look at. However, I see a lot of deals that are just listed where they hemorrhage. This is a pretty good first look. So it's coming. Okay, so we have a total of 10 units. We know that market rent seems to be about 1,200 based on the comps that we saw there. You can do a deeper dive looking at apartments.com, looking at rent.com, but for the sake of this video, let's call it 12 times 10. So you have $12,000 a month coming in. Then we want to multiply that by 0.95. I'm going to factor for a little bit of vacancy in there. So I'm good at running these properties. I get this area. We should be able to keep this thing occupied most of the time. 5% vacancy sounds right to me for this particular property. So I'm going to go times 0.95. It's not going to change it a bunch. We can probably get this deal up to a 7 cap. Up to a 4.5% return on investment. Here's what I'm seeing here right now on this deal. This is why it's been on market for a little bit. There's not enough meat on the bone on this property when it's performing at or near market rent. Let's even get generous here. You can say we're renting at 12.5. There's an argument that could be made, even if we optimize the daylights out of it. It's making 6.5%. Your money's probably better in the stock market than just straight up investing in this deal where it's at today. If you could find an argument to increase the rents beyond this, awesome, but I'm not seeing it. So this is the best I'm seeing. And a 7.5 cap, you're winning on price. You have some built-in value here, but this isn't a deal that's going to pay for itself and that you can raise additional capital for. Because on a refinance, you're not going to pull out. Remember, we're doing an initial investment of almost $300,000. If you're raising that money, where in this deal am I making an extra $300,000? I'm not seeing it. We are increasing the income by like $2,000 a month, so that's $24,000 a year. Divided by a 6 cap area, you might be able to bring up the net operating income to a point where you can get this thing worth $1.4 million. But even then, even if you create $300,000 of new value, that's just new value. You can't pull that all back out without selling the building. And with that new value, all you really can do is like return the initial investment of something. I'm not seeing enough here, which means to win this deal, you're going to have to come in more aggressively on price. And that's where we start playing with the inputs. I'm like, okay, well, if we were just to take this thing down to like 925,000, and I'm guessing the sellers aren't going to accept that. Usually when they're over $1 million, they get stuck at the $1 million mark unless they're really in trouble. But there's a quick way where you can jump back and forth. You can go like, okay, well, 10% return. Now we're starting with an 8.2 cap deal. This is looking really good. I would do double-digit returns. We have strong cash flow. We're cash flowing $25,000 a month on the quarter. I'm like, okay, this is starting to look like a deal. I would probably be a buyer around 900, 925 on this deal. I would be happy with this return. I could raise capital for this return. This would work for me. This would be a deal that I would like doing at this price. My initial offer. I hate beating up people on price, but that's probably what I'm looking at. The other way you take out a deal like this, by the way, because we don't have all of our inputs, we haven't had a conversation yet. If we find that this deal is seller financeable, you guys can have your price. We'll do a 5%. Fully normal 30-year RAM. Nothing crazy. Not even interest only. You get about the same return. Almost exactly. Like almost the exact same return. Those are the ways we take this out. We borrow less money by a lower price, or we borrow cheaper money and they get their price. That's where this deal starts to work. Double-digit returns here. reasonably over market cap. We're winning on price. We're getting a good interest. I can make this deal make money. It's in an area with a lot of population growth. I like this deal here. 5% interest. Love it. $925,000. Love the deal. I know enough to be interested in calling a broker. That's how we're doing napkin math. Like if you want to present a deal, now when you go to present this to people, like you've done everything that one would need to go through and say, okay, here's the property. Here's what I love about it. Look at the location. Look at the shape of the building. Like this is an asset that I would be proud to stand in front of and say, hey, I own this building and we have excellent tenants who pay, do a blended Section 8 strategy. Like I have tenants who need a nice place to live, who may not be the highest income people in the world, who can be proud to call this place home, and I can be proud to stand in front of it and say, hey, I own this place and I rent this place. It'll make some money. It'll be a great place to store money. In Fort Worth, there's a lot of development coming in out here. This deal can make sense. I would be super happy to own. This is the type of stuff I like to own. I don't want to own Class A stuff. Class A people are hard to manage. And when you hit a hard economic time, Class A people move to Class B. And you don't usually move too far down from this type of housing, but this is really nice entry-level housing. This is super clean, super simple. That's the type of stuff I'd look at. I'm going to go look through some of the questions here because we do have a few. Alex, can I book a paid call with you? Hour and a half. Yes, you can. I need to add that to my website as something that one can do. I usually reserve one-on-ones for people who are within multifamily strategy mentorship, and then you can just get infinite one-on-one. Like you will get as much of me as you need. If you want to do that, do me a favor. Message me on Instagram at Christian Osgood, and I will respond to you there. If you want to book a call, let's talk over there, and that'll be an easy place for me to track you. So Alexi, I will look for you there. Oscar, I got a deal that's 28 units. 800 is rent. Expenses are 65,000. They want 2.35 million. Plan to get 2 or more equity partners to pay off in 29 years. Will refinance, rip off a good deal. Refinance before 20. Oh yeah, no one's going to want to invest for 29 years in one deal. So that makes some amount of sense. Let me turn off my screen share. Okay, let's take a look here. First of all, really need to know what market it's in to really know what if that's a good deal or not. And if it's 100% occupied. I don't have a whole lot to go off there, but I can answer the question. Let me, I guess we're going back in screen share mode here. Here we go. Right as I turn it off, we turn it back on. Share entire screen. Yes, we will. Okay, so we're going in 2350. Down payment on that bad boy. Where did I throw my phone? I keep doing that. There we are. This is interesting. So we go 2350 times point. We're gonna assume 25% down for this. I don't know if that's what we're looking at, but that's gonna be our assumption. 587,500. I'm gonna say it's gonna cost. This is gonna cost us at least $20,000 closing cost. Loan interest rate. We're gonna go to market rate again. Don't have all the inputs, so I'm making some assumptions. Total expenses were 65,000. 65,000 divided by 12. Monthly expense is gonna be 5.4. Those seem low, by the way, for that many units. That seems like really low expenses. I'm gonna imagine they're probably supposed to be much higher, unless that doesn't include taxes and utilities. Let me see if I got all of our inputs correct here. 28 units, 800 rents, or refinance. 28. It appears that we do. Oh, it's in Edinburgh. College Town. I know Edinburgh well. Cap rate 21. That sounds like a high cap rate for this, but also that's a lot of units with not a lot of expenses. Based on the math that we have here, based on our inputs, 800 times 28 units. I'm going to say times point. Student housing, I actually round. If it's around a university, I'm going to say it's 90% occupancy. You're talking $20,000 here. Edinburgh's a good area. Okay, these are the inputs we're going off of. This is going to be a pretty good deal. Pretty good. Okay, a little bit of cash flow. 7.5 cap. I don't know the cap rates off the top of my head for Edinburgh, so it might be good. Or Edinburgh might be good, might be bad. 6%. It has the makings of an okay deal at 90% occupancy with those expenses. With our limited inputs, I'm gonna guess I no surprise, you'd probably like it more at 2 million, but let me just see what happens at 2 million. Yep. I like it better at 2 million. I like it a lot better at 2 million. More interested in 2 million. But it's not a bad deal. It's not a great deal. Like based on the inputs that we have. I'm also guessing that you can get in Edinburgh. I think you can get rent. I think you can get rents above $800. I think you have more upside in this potentially, but mediocre is a little on the low side. It'd be hard to raise for, but you're not like way off. It has enough traction where it's worth looking into, but it's either going to need little lower cost, or a little higher income, or a lower interest rate. It needs some tweaking, but it does cash flow day one if you have the money to put down. If you have to raise the money, that's where I get worried about trying to get that thing to flow is going to be hard because the margins are a little tight. Something to look at though. I wouldn't call it a ripoff though. It's certainly not a ripoff. Here's the big thing though with partners. I don't know anyone who would want to ride a deal for 29 years. There's gonna have to be a game plan on this, and how are we gonna get the value up to a point where I can do a refinance and pay off my investors probably within the first 5 to 10 years. Sometimes you can get people to ride 10 years, especially on a higher cash flow deal. You guys are all sharing the money. Very rarely will you have a buyout in year 30 structured into the deal. You would just say, hey, we're just general partners on this bad boy. And if one person's bringing the money and one person's bringing the deal, and you're long-term partners without the defined exit, the way that you would usually structure such a deal is that they bring the money, you bring the opportunity, and you help line up the debt, and you're going to help manage the basically, you're bringing the sweat equity, they're bringing the money. The money flows back to them. All the cash flow would go back to them, or future refinances or whatever. All incomes go to them until the capital accounts balance, and they have $0 in the deal and you have $0 in the deal. And at that point, your sweat equity has earned you the position, and the time that you got to use their money is in their position. You guys get to stay on the deal. And if you want to buy them out at that point, then you negotiate the buyout because you're both in that deal for $0. But that is the most standard way you would do it on a deal that long term. The only thing that you know is both of you are going to be in much different financial positions at the end of that. Not owner financeables, you can't come down on lower interest rates, so you have to come down on price. But that would be the way to do this, is if you could get the price down a little bit, where you can get that cash flow double digits, where there's enough to share. All the cash flow goes to the other investor, though. This isn't one where you're going to get. I don't see a clear path on a deal like this to pay yourself, because it just doesn't yield enough and there's not enough upside. Now, if you find that there's more rental income where you can really push the value, you can execute the refinance faster, paying off your investor faster, than the two of you guys could own the deal. I did a 26 unit very much like this. Great deal, great price, needed time to get the value up. Brought on a longer term partner. He actually owned, I usually own more than 50%. In this particular deal, I own 40, he owns 60% of the deal. And we're going to go through it. Once his capital is returned to him, we both share cash flow in proportion to our equity. I get 40% of the cash flow. He got 60. I never put $1 in the deal. I did line up the deal. I did do the operation. So between all of us, that's how that deal ended up working. That's a structure that works really well for a longer term partner, where you don't have a very clear exit in a short period of time. But you would need to have that input. And again, we're missing some inputs, right? We have very, very, very limited numbers there, but that's what I'm looking at. There's no way that's a 21 cap though. There's absolutely no way that there's something wrong with the math there. It's closer to like a 7.5 cap. Looking through a couple of these here. Jump over to Instagram too. I'll answer your questions on Instagram as well. I've been giving YouTube a little extra love. Do we have questions on Instagram? Or just have a bunch of people watching? Hey, I see my wife in there. I wonder if she's still in there. Hello, Danny. I'm surprised we don't have a comment from her saying I'm not allowed to buy this. I actually really like that deal. I'm going to make a play at that tonight. Not sure I'm going to get it because, again, I think we're off by about $100,000. Could be a deal, though. LTV is loan to value. Wyatt asked this a little earlier. Wyatt, LTV is loan to value. That was answered a little bit later in the chat. Is there any way to put the presentation vertical or full screen? Can't read the text on screen share. There's not on Instagram. The best place to watch these is on YouTube. When I stream to all platforms, I optimize for YouTube, especially because I'm on the computer. I do the same orientation as my screen is. If I go live just on Instagram where I'm doing like a Q&A, it'll be talking head style. You'll get me vertical on that. It depends on the format. For this particular thing, easiest way to see these is to hop over to YouTube. I will post the video tonight too, so you can watch it in any orientation you so choose. How do you get the annual operating summary on that last deal? I just went to the listing. I clicked OM, the offering memorandum. Very common to have on Crexy. Very uncommon to have that good books. Guys, we rolled a good set of dice on those. Like, that was a deal that it was actually interesting, that there's a chance that I do. Again, I'm going to have to adjust price. But that is a good deal. Or potentially a good deal. I'm actually wondering who the broker is. I might call them. I have Kevin. Ten-unit building. That could be a good one. Let's see if he's available. We'll just call him live. If I do this though, you guys all have to like and then share this video, because I don't like doing a lot of live calls. I think it's kind of mean to the broker to post these live, but now I'm hesitant about it because if he gets mad at me for calling him live, that would be whatever. 4236. I'm gonna give him a quick call.
Hello, this is Kevin Matthews.
Hey, Kevin, this is Christian. How's it going, man?
Yeah.
I am doing fantastic. I was actually, funny enough, I'm on Crexy, which I'm almost never on. But I was looking at the 10-unit that you have listed in Fort Worth.
Yeah.
Is that one still available, by the way?
Yes, that one is.
Okay, good. Last time I called on a deal, I talked to the broker like 10 minutes before I learned that it actually wasn't available. So good start. Yeah, always good to check on that particular property. I saw that was around for like 60 days. I also noticed that you had it listed at like 65% LTV. I was curious if there's any particular reason you're aware of that's still around. I like the price of this deal quite a bit.
So yeah, we were actually under contract.
Yeah.
And it fell out because the buyer's property was in Tampa at one of his other assets and got smacked by the hurricane. And
shoot!
Did not want anything else to deal with.
Okay, so did it just come back on market, or has it been listed for a little while?
We're about 2 weeks back.
Okay.
Then we had the election, which was a standstill for a week.
Okay, so my timing might actually be good. I haven't found a deal that I liked yet in Fort Worth. I own in Stephenville, Texas, then all over South Texas. I live up in Flower Mound, so this is like a lot closer to me than the rest of my portfolio.
Yeah, South Texas. Yeah.
I'm pretty interested in this one. Okay, so it's been around. Is there anything that I should know about it that would come up during due diligence? Like, is there anything I should just be like generally aware of?
I mean, no. I mean, it is an older property. It is cast iron plumbing in it.
Ah, okay.
For the most part, that we know. We don't know exactly everything inside the walls. The owner hasn't taken them all apart.
Okay.
So that's kind of the only thing that I would probably mention that you pick up on any older property.
All of my cast iron plumbing is actively in the process of failing, so I know that it's the end of its usable life. They haven't used that for a while, so okay. Budget for an upgrade to PEX. That is actually super helpful.
Yeah, and that's what I would say. On that I would.
Okay. When this went under contract, did it go under contract at this price? Was it at the $1,075,000? Just under. Okay.
Yeah, but I think for that we could probably get some portion of concession on the plumbing, but everything else, electric, they've upgraded and done with all that. New boxes, individually metered on that. And then each unit, they're all slightly different upgrade package. There's probably 4 that I say are in great condition, and the rest are, fine.
Okay.
Don't really need anything.
Fully occupied?
90%.
90%. Okay. And totally out of curiosity, just because I noticed on the loan terms, you guys wrote it like 7.5% interest and 65%. Any reason that we were that conservative on the loan terms, or is that just you guys being generous on the loan terms there?
We could probably get a little bit more aggressive. I try and play it decently safe on that, but also it is a kind of a tough market for debt in this product size.
Mm-hmm. I know it.
Yeah, you really have to get over that like $1.5 million hurdle.
Yeah.
So this area is tough if you have a good bank relationship. Honestly, that's the best way to do it.
Okay. I do.
And you can probably get higher. Yeah, that's probably where you're going to be able to get the highest leverage. A new relationship without doing a deposit at a bank is probably going to be within what we're at.
Okay.
Unless you want to do like a bridge.
No, I got a guy who's I think crazy enough to go 75% LTV on something this age, that size, only because I do other stuff with them. But
exactly.
I think I know the lender for that. I have like 50. I have 225 plexes that they financed at 80% LTV, but they were a little newer than this building. So okay. I am interested. I have a business partner named Caleb. I'm going to run this past, but this is the first time in a while I've seen something in Fort Worth that I am actually sincerely very interested in. This would be small for me, but a lot closer to me than the rest of my portfolio, which makes me very intrigued. If I can ask you just an honest question, how much action are you getting on this right now?
I got one offer today, decent, and expecting one more.
Okay, so we gotta jump. Okay, I will.
Depending on your like the seller cares about speed, pricing and then speed.
Okay,
are his 2 biggest things. To be forward with you. That's kind of where they're at.
Okay, speed will not be a problem. I can go as fast as a bank will allow us to finance. Cool. I will get back to you later today. Yes or no? I can shoot you a text or give you a call at this number. I'll try to let you know within an hour.
Okay, that'd be great.
Cool. I appreciate you a lot, man.
Yeah, no problem.
All right, you have a good one. All right. Well, we found one of the problems. I hate cast iron plumbing. If you guys, if anyone's part of the Instagram, I have a little brand channel that you guys can watch like some of our insider stuff there for free. But Cody just removed a ton of cast iron pipes that are just completely corroded out. They're expensive. That would be. Oh, see, now I only like this thing at 900,000, and we know that if he's telling the truth, we know that there are buyers that want to come in and pick this up. This deal's probably going to disappear unless he's lying about the buyers, which brokers sometimes do. I don't think I want to pay over 900,000 for this. I'm going to get a second opinion from Caleb. If we pick this up at 900,000 with a budget to do those pipes, the only other thing I don't know is I just don't trust the market rent. I need to do some research on market rent. I would say there's a 10% chance that I go under contract for this today. But this is how you find deals on market. This is literally this is the process. That is as hard as it is. That is as scary as the broker call gets. Their job is to sell you the building. Ask about the property, ask about the area, those were basic questions, right? How did the bank look at this? What am I worried about when I do my due diligence? Oh, nothing. Oh, except that you have super old pipes that you're going to hate. It's like, okay, well, that's major. But electric's good. They're separately metered. That's going to make it really easy for utility bill back, which I noticed the owner was paying utilities. So I have upside there. That's it, guys. That's how simple the game is. Fun deal. Again, I do not do a lot of live calls, so you guys can, take that for what it is. That is me doing a live call on here. Nobody blast Kevin and be like, "Oh, you were online." Please don't do that to me. I want to be able to call people without them being worried about responding. So you haters out there, don't do that. But yeah, this is a real way to look at a deal. This is really how you would analyze them. There you go. My gift to all y'all. You're submitting an offer even if you don't think you'll get it, say 900. I would probably So I have a partner who's doing a 1031 right now who's going to have way more than enough money to put down on this. And his deal closes in 45 days. And this is a pretty good deal at 900. I would have another call with Kevin and I would say, look, we can 1000% close this. I am your most obvious buyer. And seriously, this would be the smallest deal I've done in 2 decades. Like I have not bought deals this small, or not 2 decades. That is totally not true. I was a child then. In 2 years, this would be the smallest deal I've done. We could close it. We'll see about the speed. As far as how sure of a buyer we are, we have a 1031. If the 1031 fell through, I can close it as well. A lot of different ways to do this. I have the money to close this right now. It's a small transaction in my portfolio. I'm a really strong buyer. They would have to accept my strength as a buyer and the size of my portfolio is probably the reason that they went with me. I'm guessing they're going to get an offer for more than this. I'm probably not going to win, but I do like it at 900. I really like it at 900. 90,000 a door in that area of Fort Worth. I just have to do a little bit more research. I'm not going to bore everyone with like a ton, but since we're all here on a live, let's do the thing. I'm going to go share my screen one more time. Quick look. First look. Share. Okay. What was I going to do? Oh, now you guys know that I'm looking to buy a Toyota Tundra. Let me think here. Also that I don't know how to spell analysis. That's why my search history says live deal analysis. I had to double check. I'm not a good speller. Let me think here. Let's go to barnes.com. Okay, then we're going to go Fort Worth. I want to see what stuff's actually listed for in that area. And it went to Roanoke, Texas for some reason. Fort Worth, Texas. All right. It was over in here. Saginaw area. So we're going to be closer to Lake Worth, Saginaw, Blue Mound. So in here, these are all a lot nice places. All the nicest places are always paid advertising in big cities. So we're going to go a few pages in. I want to see the general listings. And now we're in houses. So we went to general. I just want to feel that 2,500, maybe even 1,300 is attainable. Wow. Okay. Apartments is feeding a boatload of houses in here that all do rent for decent rents. Good intel. Okay. So we are looking on page 1. We're going to skip all the giant communities, though. We're going to go to the mid-sized stuff. Stuff like this. Okay. 1 to 3 beds, 985, 14, 1217, 1250, 1217, 1,000, 1,000. So initial take, you have a huge range of stuff, and obviously houses rent for a lot more. 12 is probably our number. Again, napkin math. I'll click this. This is pretty darn similar. It's the same hideous black backsplash even. I wonder why this one's so much cheaper. It'd be nicer than that. So, I mean, you have some pressure here for lower rents. I'll be doing more research, and I'll hop into CoStar, and I'll hop into what's it called, Rentometer, and I'll find some averages around that building. But I think their estimates were probably pretty close to correct. If you can shoot for 1,200, they're pretty happy with that. It's an okay deal. It'd be a really good place for my friend to park cash that was doing 1031. So if he funded the deal, he gets to defer all of his taxes. I get some ownership. He gets ownership. He supplies the capital. I return the capital to him over time. It's one of my long-term capital partners, so I'm not worried about executing a huge buyout really fast. It's one where I can slow play it. All the cash flow goes to him until he's in it no money. I'm in it no money. He rolled his taxes successfully. I'm managing the project. I'm seeing a way for us to put this together. Well, there we go. If you guys needed an ad for joining Multifamily Strategy, this is what we do every single Tuesday on the mentorship, but you guys bring the deals and I tell you how to put them together. Then we also have Monday calls for Q&A. We have Thursday calls. I mean, there's a lot of stuff we do. By the way, if you're still here and you guys want to meet up in person, I dropped a link in the description on YouTube. But Robinhood Village Resort, I'm running a creative finance seminar there. Cody's going to be there. I'm going to be there. Caleb's going to be there. My friends Dion and Mike are going to be there. Catered. You can stay at my Seller Finance Resort. If you guys want to do that, links below. You guys can register for that. That's going to be the 22nd, 23rd, 24th. Or you can just come for the main day on the 23rd with a day pass. Up to you. But that link is in the description. I would love to see some of you guys there. If you like this video, again, do the things for the algorithm. I appreciate it. I love putting in the effort on these, but give it a like, give it a share, post a comment after I do this. All those things are good. So I appreciate you guys a bunch. And I'll next time I'm underwriting a deal, I'll hop on and we'll get your questions answered. Talk to you all soon.